I guess I should unmute my mic. Doing all that talking. Hey, y'all, I was asking you, I'll ask again, if everybody's having a good Sunday. Are you enjoying your Sunday? Did you get some rest that was there? Did you go and do? I thought it was just me, no audio. I'm here, Mr. Bill. I've got it. Thank you, Johnny, for helping me. Y'all don't let me be out here looking crazy. Make sure I switch over to the right server because I think we're on the wrong. I'm on the. It's coming back around. There we go. Looks like we're in the right place now. It's attaching or connecting to the right place. Yes, I was asking, did anybody do anything today that was restful? Did they prepare for the week? Did they go like me and go for a walk this morning? I went for a walk this morning, wanted to get some of that. I think I'm going to try to put that into my life, my daily life, because I find that if I don't go walking or whatever first thing in the morning, then it ends up getting pushed back. So I'll see if maybe we can put that into the daily schedule, because once the trading day opens and I start trading, it's just like, do you want to, leave your post? Do you want to leave your post? And many times the answer to that is no. Bill, hey there. Tanya's here. Tanya's like, yes. Miss Deborah here. Hey there, Miss Deborah. Johnny said just did house cleaning, getting ready for trading tomorrow. Yeah. Do a little, let some videos play. I'll turn on videos sometimes, YouTube videos, and let those play while I'm doing other things. But I really do find that when you're looking at YouTube videos for trading, you really need to be paying attention. That's not something you can watch like a TV show and just let it play in the background. You really have to be listening a whole lot closer than when you're just like watching something. I know I did yesterday. I was grading papers. I told y'all I was doing final exams on I did final exams. Is that still open? Yes, it is. I did final exams Saturday was, we did them on Saturday, which was yesterday. Yes. And I had to grade some portions of them pretty fast so that I could turn them around so the students could see what those grades were, because they get the opportunity to reassess some of the topics. And, I'm kind of, I think that's a different Miss Deborah. Hey, Marcia. That's Miss Deborah Moore. This is the thing. As a teacher, I would always give tests, and then I would give students a chance to do test corrections. Test corrections when they had to do some work, and they would do test corrections. So this reassessment, now I was teaching, 7th graders, 8th graders. I was teaching children. Right now we've got college, right? I'm in college, and I teach college algebra and I teach pre-calculus. So what we've started doing the last couple of semesters is allowing the students to do what's called a reassessment. So they take their tests. After they take their test, they get to do some worksheets or some work, and then they can reassess on a particular topic that they didn't do well on. So I guess all intents and purposes, this does fit the same concept of test corrections. You do a little extra work, you do the test correction, So you're not taking your way back. Go ahead. Hey, Rich, how you doing? So from that standpoint, I think yes. Now this is where I think the line is a little long. Is to me to be drawn. Is we're at final exams, and they also getting the opportunity to reassess part of the final. And I'm kind of like, okay, well, along the way, maybe so. The final exam, I don't know. This is one of my fellow math teachers, Rich Speakman from Guatemala, is here, and we worked with that whole test corrections idea. And for them, I think I can, and I know I'm off topic, but I can agree with it, because I think the ultimate goal is that the student does learn the math, that they learn the skills we need them to learn. So if some extra infusion of extra work is going to help them to get the knowledge, then I guess that's okay. But then I kind of feel like when we get to the college level, we should be operating a little bit different. So I kind of feel like they don't have to necessarily do a whole lot of, I don't say they don't have to do like the appropriate amount of studying on the front side, because they can just reassess. I don't have to study really good for this test. I'll just take it and then I'll just reassess. Really though? Really though? You would rather sign up for the extra work versus doing it all, doing a good job on the first pass? But okay. Okay. Okay, let me focus on what we're supposed to be doing here. What are we here to do? Well, it is the week of we're coming into the week of April 29th, which will expire on May the 3rd. That's this coming week of trading that we have going on. And let's talk a little bit about what did last week look like. Come on. You should be going a little bit faster. Jamie, I asked the other day for, somebody, you, to talk about another computer for me so I could have one for just my streaming and one for like the work I do, because I seem to be overloading the work computer with the streaming. Okay, so this is SPX last week, S&P 500. This is what it did last week. This is the weekly chart. So every candle is 1 week's worth of data. Yeah, can we all see that? Let me make it where you can see it a little bit bigger. Yeah, let's bring me into the screen. There we go. That gives a little more room. I don't know if Brian's on. Brian can say whether he can see the candles. I know the numbers and stuff over here probably aren't really able to be seen very well. But anyway, this was the week. So the week last week would be seen as what, if you're a stratter, if you're somebody who looks at the strat, that's what these numbers are at the bottom. This is the strat. And last week would be seen as an inside week. You got inside candles and outside candles. And the one, it basically means it's in between the top and the bottom of the previous candle. That would be an inside candle. And since we're talking about the weekly candle, this is an inside week, right? Generally, you wait till it can pop out. This is like where you bring in the breakout strategy. Does it break out going up? Does it break out going down? And then you can ride along with that move. We can see here on the weekly chart, there is a green on the time frame continuity. And for the month and the quarter, it is red. But for the year, S&P is still green. So this is what happened last week. Let's look at what happened on the daily chart. Daily chart. We had a big gap here. Every day, this is what happened. Now, I saw something last week about gaps that I thought was quite interesting. And I'm going to see if I can see something on here that's going to be able to, so I can show you what I'm talking about. But it talked about the gap really is between where one candle closed and the next candle opened. And in some cases, like these over here, this is a green, so it opens green. But like, let's say for this one, between these two candles here, this 2-2 candle. And if you're not tuned in, tune on in, because I'll get ready to teach you something. Okay. This one closed at the top of the candle, right? This one closed at the bottom. This was a red candle, so it closed at the bottom here. But then this next one opened here. It opened at the bottom of this next candle, right? If you think about it, if you go from close to open, it actually opened down here. Now, it turns out as the day progressed, the price action did go ahead and fill the gap, which puts you really right there. But like if you're in situations where that price action doesn't, let's say it went down and then it was maybe down to more, or it went down and only opened up or came up a little bit, that would be a bigger gap, because the gap is from close of one candle to open of the next candle. I thought, wow, that's interesting. I saw somebody else do it on a chart and I was like, okay. So the gap we do have here, which was between Thursday and Friday, and that was just something I threw in on there. This gap between Thursday and Friday, come on, still is a part of this gap that was formed between Wednesday and Thursday. The gap is, where is the support and resistance in between these gaps is really the 50% mark. It can be each of the level, 25, 50, halfway. So there's some support at the top of a gap, support in the middle, support at the bottom. So where before we've I have just talked about support being at the bottom of a buyer's gap or at the top of a seller's gap, it really has some support in the middle as well. So we got to keep keep that in mind. Yeah, I know, Jamie. I know you've talked about it before. So now just tell me what we should get. We don't have to point out that you've pointed it out before. You people, this is the thing, I'm not going to talk bad about my help because he might stop helping and we don't want that. We don't want the help to stop helping. We don't want that. Okay, so this was SPX last week, right? This is what happened during the week. There was a little bit of a gap back here that didn't really get filled. This is between what, Friday? Oh, that's Monday. This gap between Monday and Tuesday. And if we look at it, it didn't really get filled all the way. So part of that gap, if you see what I'm doing there, part of this gap still needs to be price action on Thursday, filled a part of that gap, but not all of it. So we can adjust this little gap thingy to let you know that there's still some gap there. Okay, that was last week on SPX. We did have some jumps. Notice if you were trading Nvidia last week, Nvidia decided we out of here, decided it was on its way, right? So this is what we came up with for what we saw last week for Nvidia partway through. It had been pulling back a little ways. Maybe it was just pulling back to get some strength. That's not the way you say that, but I'm just saying. So once it pulled back, got a little strength. Yeah, we got a little up, pulled back a little bit. And then after Thursday, it decided we ready to rock on. So Thursday's low was 782 and Friday's high was 883. So 100 points happened between these 2 days, these 2 green days. And if you were somebody who was still in a call between this gap here, then you jumped up in the morning and saw that you had a little talk about having some monies. You had some monies on Friday morning. And then if you rode it all the way up, then that was a good ride. I'm going to actually show you a trade I did last week. If you're in my email list, you probably saw what we did. But on Thursday, I used Capital Flow. And I've mentioned Capital Flow to you before. But Capital Flow on Thursday started to send out multiple orders about with calls, capitalflow.app. I'm putting it in the chat. Started to send out multiple call orders that have been placed on Nvidia. So once we started seeing millions and millions and millions of dollars being poured into Nvidia on Thursday. People don't put millions of dollars into billions into a place that they don't expect it to make a move. And we've talked about Capital Flow before. So on Thursday, I decided to do a call debit spread because Nvidia's contracts were a bit expensive. So of course, we could have done put credit spreads and rolled that up, or I did a call debit spread and rolled that up. I'm going to share the results here in a second, but that's what I did on Thursday. Actually, I closed it as soon as the market opened on Friday. Y'all was on the call with me Friday morning, and I closed it right away. And I really wish I hadn't. Now, the thing about a call debit spread though is that it's got a capped profit. So if it's a 5 spread, which mine was, you all can see my trade on the screen. I had an 840 call and I bought the 845 call. I spent $130 to buy. I spent $130 to buy that debit spread, which means I had the potential to make only, and I'm going to put only in quotes, only $370. Well, where the $370 from? For my profit. It would have come from 130 subtracted from 500 leaves you the difference between those two is $370, right? So if I had closed the trade at 500, then I would have kept the 370, but I closed at 407, which was as soon as the market opened. Notice here when I finally took the screenshot at 3:44 in the afternoon. At 10 o'clock in the morning, I took the screenshot. And at the time I took the screenshot, it was already at 468. And we know Nvidia ran all day. So it really could have gone all the way up to 500 if I had sold it back for 500 or closed it for 500 Take away the 130 I paid, I would have kept it 370. Turns out though, I got what, $260 something, $263 is what I ended up with. I was fine with that. Okay. You see, I got a 213% return. And this came as a result of capital flow. So I'm not necessarily saying capital flow is what run off, but I'm saying, I'm saying capital flow is a good place to be and a good app to get because of the fact that it shows you real time where is the money going in options contracts. Shows you real time. Capitalflow.app. If you go to that app, there's a JT is the guy. I know the guy who created the app, and he is running for $17 for your first month. You can get for $17, and after that, you pay $35 a month. And if you investigated any flow, you'll know that the other flow apps are more expensive than that. But you can use this. You can use the app for as a buyer or use the app as a seller. Right? Because I totally could have done was seen there's a whole lot of bullish action going for I could have seen there was so much bullish action going into NVIDIA, and we could have put credit spreads. Would have been like getting right at the money, let it run. It was going to be, a couple of days, and you definitely could have maximized. You could have spent, more money on contracts and could have put in your money that way. All you needed to do was stay away from your strike price. When you're a buyer, things are a little bit different. You need price to keep going. NVIDIA did in this case, but sometimes when you're a buyer, you're a little nervous about where's it going to hit some resistance and decide it's going back, and that definitely could happen. So if you go to capitalflow.app, tell JT I sent you. It's got a lot of good stuff. We got the calls for the different stocks. Any stock you're looking at, it'll show you what is the flow for that stock. You can see where areas of massive or heavy flow is coming. You can see that, or you can just look at a particular stock you're looking at and see what kind of flow is coming in for that stock. All right, those are something you can take a check at. Right, you can take a check at that. All right, let's go look to see what we've got for earnings coming up this week. Now, y'all know my darling has earnings first thing in the morning. The SoFi has earnings in the morning. Let's wait and see how that plays out. There's some people who are really anticipating that SoFi is going to make a good pop on their earnings before market. That remains to be seen. They are profitable at this point, and I think have been, and they're really like a industry interrupter. Y'all have heard me talk about SoFi so many times. I don't have anywhere near as many shares as I used to have because SoFi just kept fooling up. It just decided it didn't want to do. It was like, hello. So anyway, that's tomorrow morning. They're going to have earnings on Semi or on Sim. Maybe that's an I hiding over here. Domino's, Phillips, Jinko, BBVA, Franklin, Templeton. Looks like Datto or DQ, New Jersey, Alliance, and the Bank of Maria looks like that says. Paramount is on Monday after the close. NXP, Transocean, Logitech, Woodward, Chegg, Arch, Lattice, F5 or 5, is that 5 below? And then Rambus, that's all Monday. Tuesday morning. Y'all remember the show, the store Tuesday morning? Anybody shop at the store Tuesday morning? There's a store called Tuesday Morning. Anyway, PayPal before the open. Lilly seemed to be one that's catching some attention because of they're in the pharmaceutical space. But I think Lilly is the Ozempic people who make Ozempic is Eli Lilly, and they're expecting. Again, I can't speculate because nothing I say is investment advice, but they are, excited about the future based on the diet drugs, if you want to call them that. Ozempic and Mounjaro. I don't know if Mounjaro is by Lilly. They may be by a different company. 3M is Tuesday morning. McDonald's, Coca-Cola. Coca-Cola's good for dividends. Sirius XM, Eaton, Kamiko, Enterprise Products, and Melco. I'm not sure who they are. Tuesday after market close, y'all see Amazon from A to Z. What a creative logo. Amazon after close, AMD, Supermicro, SMCI, them semis. That's what NVDA is a semi. All the semis doing their thing except for INTC. So can somebody go tell INTC or Intel that the semis are moving? Can somebody go knock on their door and be like, look, y'all, the semis are moving. Are you coming? The semis are leaving. We're leaving the station. Are you coming? Starbucks, Riot is here. Pinterest, Caesars, Root, One OK, and Lemonade. Wednesday morning, we got Pfizer, CVS, MasterCard, Barrick, Wingstop is there, Norwegian, Kraft Heinz, Marriott, Estee Lauder, and Generac. I think Generac, the people who make generators, is that them? Wednesday after close, we got Qualcomm and Devon. Oh, where are you going? No, go back, go back, go back. There we go. Devon is an energy, I believe. Devon or Devon. They depend on who you ask. They have, I believe they're energy. Paycom is on Wednesday after close. Carvana's actually been making some moves. Axelis, Fastly, Etsy. Who's that? Somebody mining. Sonova and MGM Resorts. MGM earnings. If you got an MGM trade going, earnings. Novo Nordisk is Thursday before market opens. Canadian Natural, Peloton, Moderna. We used to trade Moderna all the time. We don't hardly get them mentioned now. Moderna, I think, was big when we had C19 going. Moderna was hot. Zoetis, Penn National, APA, ConocoPhillips, which is in the oil space, Wayfair, and Cigna. Thursday after market close, Apple, Coinbase, Block, DraftKings, Cloudflare, Billy, Fortinet, Booking Holdings, Amgen, or Amgen, and Expedia. Friday before market opens, we've got Cheniere, Hershey, Fubo TV. I'm yet holding on. XPO Logistics, Arbor, Fluor, CBOE. Is it CBOE, the people who like the clearinghouse for our options? Isn't that CBOE? I know they had a company for earnings. Plains, Amneal, and Brookfield. That's all happening in earnings this week. Lots of earnings. And I'm sure that I know this is not all of them that are doing earnings, because the earnings list has lots of names on it. They Earnings Whispers, which we appreciate them, always creates this graphic, and they create the graphic based on like most anticipated earnings. I think it says that's here at the top, most anticipated earnings releases. So they put the big ones up here. Not everybody who does earnings is on this list though, but whoever you're trading, you need to make sure that you know when their earnings are. Yep. Intel is being contrary to the word of God. Definitely. It's like, bro, we are leaving the station. Are you coming? Intel is like, I'm just going to hang out here and hope somebody starts checking for me. They're like Jesus when they went, when Jesus their parents was gone halfway down the road. They were like, anybody know where Jesus is? Where's Jesus? And they had to turn back and go find Jesus. He was in the temple doing what he needed to be doing. I don't know if Intel, though, is in the temple doing what they need to be doing. They're just not with the train station that is going, the whole convoy that is leaving. Envoy. Intel is not with the convoy. What are you doing? What are you doing? Yeah, that's the CBOE, Chicago Board of Options. It's just them, the same people who do that. Okay, good afternoon, Ward. That's our earnings for this week. All right, let's go look at what's on our calendar. Let me put myself back on the screen, and let's see what's on our calendar. Okay, we got some stuff happening this week, okay? Meetings is a red folder. I want to see every single day there is a red folder. Okay, if you don't do right, then we can't do. Okay, there we go. On Tuesday, Monday, there's nothing. Don't let that excite you, though. But Monday, there's nothing. Okay, Tuesday. Okay, come on, mouse. There we go. Tuesday, we've got employment cost index. Oh, no, you didn't want to do right. Didn't like it that way. S&Ps, that's a red folder, by the way. 8:30 in the morning, employee. Now, I don't remember seeing employment cost index before. So let's go see what this is talking about. The change in the price businesses and governments pay for civilian labor. Ooh, okay. It's a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer. Yeah, but the reason we're paying more for labor is because we should. Hello, we got people minimum wage doing, more than minimum wage jobs, and the minimum wage isn't where it needs to be. Anyway, so now they got to pay more for people, because if you're going into any restaurants or any places recently that we're short-staffed. Yeah, a lot of them are short-handed. Like, you got all these seats. Why y'all can't sit us? Because we don't have any servers in that area. Okay, then Okay, so the employment cost index quarter over quarter is showing up tomorrow morning, Tuesday morning at 8:30. S&P CS Composite 20 HPI year over year is an orange folder, 9 o'clock on Tuesday. Chicago PMI is 9:45 on Tuesday. And CB Consumer Confidence is 10 o'clock on Tuesday. Red folder, ding, ding, red folder. Okay, that means volatility anticipated. Wednesday, 8:15, we've got ADP non-farm employment change, red folder. Final manufacturing PMI, another red folder at 9:45. The ISM manufacturing PMI and JOLTS job openings, 10 o'clock on Wednesday, red folders. ISM manufacturing prices, construction spending, those are also at 10 o'clock. All day, we got the vehicle sales. 10:30 is crude oil inventories. 2 o'clock, federal funds rate. And ding, 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 FOMC statement. Anytime that the FOMC starts to talk, you can expect volatility. So FOMC press conference is on Wednesday afternoon, 2 and 2:30. 2 and 2:30. Okay, expect that to be so. As you're doing your trades, keep that in mind. Okay. Thursday, we've got challenger job cuts at 7:30 in the morning before market opens. 8:30 unemployment claims, non-farm productivity, unit labor cost, trade balance. That's all 8:30. Red folder for unemployment. 10 o'clock, we got factory orders and natural gas storage at 10:30. Friday morning, we have some red folders, 8:30, average hourly earnings, non-farm employment change, unemployment rate. Final services PMI is 9:45, and 10 o'clock is ISM services. Didn't we already have a PMI back here? I mean, PMIs we're going to have in 1 week. Did we? Maybe that's not the one. Maybe I was. Oh, there it is. Yeah, manufacturing PMI and ISM manufacturing PMI. That's Wednesday. So we have it twice in the week. This says ISM services PMI is there as well, 10 o'clock. And then at 7:45 at night, after the market closes, we're going to have FOMC member Williams will speak. Okay, this is the plan of what's going to happen next week as far as meetings. Notice every single day except Monday, there is a red folder, which means volatility can be anticipated. Not to mention that all the stuff we have going for earnings, that all plays its role as well. All the stuff we have going for earnings, it plays its part as well. Okay. I wanted to share with you, I talked a little bit last week. Maybe I'll go here first. Maybe. Where's the slide I'm looking for? There it is. There we go. This is our list of trade ideas for the week. So take a look at it. And even if you're in any of my communities, you can also see what this is. You can get this graphic there. If you get my emails, you can see this graphic. But like I said in my post on Facebook, there are literally thousands of dollars on this list. There are literally thousands of dollars. Now, if you are, unknowledgeable or not knowledgeable of what this stuff looks like, then let's get you, lined up for that. Because I also included a video. If you then follow me on Facebook or any of those places, I put a video link there. Let me see if I can grab it real quick so we can see what you can use for some videos. Did I put it there? Maybe I did not. Oh, there they go. Here's a video you can watch to help you to see what's going on with credit spreads. Of course, I have a training that is more involved than this, but this video will give you basically an intro. Nice, more than an intro. It's like explained pretty well in this YouTube video, right? But you can look at these trade options or trade ideas. That's what they are, ideas, okay? Not investment advice, ideas, just so we know. Okay, you can look at the put credit spreads at the top. We got a bunch of those to choose from. Call credit spreads in the middle and iron condors at the bottom. I get these options. I get this whole watch list from PeakBot. Y'all know I roll with PeakBot. Them's is my peoples. I roll with them. I'm gonna go to their screen so you can see where we are. I add them to the stage. I'm actually gonna go back one so you can see. This is usepeakbot.com. PeakBot is automated trading for sellers. It's automated trading for sellers. It's going to give you the opportunity to, while you're learning options trading, while you're learning it, you can use PeakBot as your hands free. You can use it as a supplemental. Maybe during the time when, though you understand the strategy, you may not have the time to be trading and be watching trades during the day, because many of us, have 9-to-5 jobs or something else we're doing. Even if you don't have a 9-to-5 job, you might have something else you want to be doing during the trading day. Why not let PeakBot? No, we don't want to exit the page. Why not let PeakBot do some of the automated trading for you? Okay, now all snap. That's Chrome. All snap. Okay, I went to the watch list here. I'm going to tell you where I get the watch list from. And there's some people who use the PeakBot watch list who don't necessarily trade the strategies. They just use the PeakBot watch list. They don't use PeakBot necessarily. They use the watch list. Either way, I like to see the watch list, because what you see that it does here is the watch list is going to tell you whether the trend on this particular stock, is it bullish? This is going to be lower risk level. And if you're going to trade it as a spread, it's going to tell you, basically what the potential is for the amount of profit you're going to put, the amount of collateral you're going to have to put in. $200 collateral for this, most likely $150 for this, $150 this. This is cash needed if assigned. Well, the way you're going to make sure that you don't get assigned. So you really only need to look at the max loss. This is the amount of the spread. This is the amount of the spread. So we've got bullish, lower, right? If you're doing bullish, come on. Dang, it don't act like it want to move. Come on. Anyway, you've got bullish, you've got neutral, you've got bearish, you've got lower risk, and you've got like a medium risk. I come here to the watch list. Here is what I come to do. And then I take these stocks and I come up with the strikes, right? They put in some strikes here based on the 30 delta and the 10 delta. I don't make the spread as wide as that. Many times I just do a 50-cent spread or a dollar spread. I just might need to download it. And then I will put in strikes on our graphic, right? But I want you to know that this watch list is here and it's updated daily. You see here, we've got bullish, neutral, bearish, right? Then you got moderate risk here. You got bullish, and that one had a bearish. It didn't have a neutral. But I took these stocks from this watch list, and that is what I used to create our list for the week. Now, I used to use bar chart. I used to go someplace. I went to barchart.com and looked at their call credit spread and put credit spread list. I have bar chart for free, so you didn't have a lot of really didn't have a lot of control over what you saw. You just basically saw what they decided to show you, unless you wanted to pay, and I wasn't paying for the membership. So in the PeakBot watch list, it's got more going on there. This is what we have. If you see something that you want us to look at, please comment. I'm going to see here which ones I like, and we'll look at a couple of these while we're on the call. We'll look at a couple of these on the call. Let's see what we like on here. We're going to get a 50-cent spread. Let's look at Delta Airlines. And then we're going to get a 1 spread. Y'all like TSM? And then I'm looking at the put credit spreads right now. And then we could look at, Royal Caribbean's there too. Google's a 2.5 spread. We'll look at the call credit spread. For Delta, I have 48.5. And for TSM, I have 135. I'm going to show you all how I count with these on the chart. That's why I'm pulling this up. Call credit spreads. We probably shouldn't do, didn't we just say Pfizer has earnings this week? We probably shouldn't do Pfizer if it has earnings. It probably shouldn't even be on our list. We can see what Intel has to offer us if we want to see what they're going to do as a stock. What do we see? Intel at 33.5. And I've got XOM. Some of us have traded XOM. Is that still working for us? XOM is still working for us in the community. 121. This ink pen does not want to do what it's supposed to be doing. And our iron condor. I'm going to look at our iron condors. BABA and Oracle. Oracle, we've got 114, 115 for the PCS and 120 for the call credit spread. And BABA, I don't really trade BABA, but it doesn't mean we can't look at it. 74 and 78 on the call side. Exxon, okay, I got Exxon on the list. Exxon works when it's working. Yeah. It's almost like Oxy. Oxy will decide it works when it's working too. It works when it's working. That's not where I wanted to go. There we are. Are we showing this on the screen? Yes, we are. Last week, I wanted to show that last week I used PeakBot as the trend spread. The trend spread bot is in testing right now. It's in beta testing. It should be coming live by the end of, I want to say the middle or the end of May. I want to say May 20th, maybe I was told something like that. But this is the trade I did last week using the trend spreads bot on PeakBot, right? I did do Oxy and I did XOM. Now I picked those out before I actually saw that Exxon was going to have earnings on Friday. So I closed both of these trades on Thursday before earnings on Friday. I didn't want to leave a good trade to go bad just because Exxon was going to have earnings. I didn't want to risk that, and I had no reason to risk that. So the bot entered for me the 63.65 put credit spread, and the premium collected was $21. So I leveraged 200 of collateral, and the bot collected $21 for me. I closed it for $3. So I ended up keeping $18 of premiums from that trade. Exxon 114, 117 put credit spread. So that's a 3 spread. So that's $300 of collateral I used. I collected $48, which is over good almost 15%, actually over 15% collected in premiums. I closed it at $7, again, ahead of earnings. Turns out when it was all over that the earnings was such that I could have stayed in both those trades to the end, but I didn't know that on the front side. So I went ahead and exited those trades. Even with the earnings, they would have gained max profit, but no reason to risk that unnecessarily. I ended up keeping $59. Did I keep $59? No, I did not. I ended up profiting, took away 741 plus 18 is... That is $59. Okay, so I kept $59. I did $59. Using $500 of collateral. So I made over 10% return, letting the bot do the work. The bot entered the trade, and honestly, the bot would have exited the trade had I not. You can control it yourself. I did close it myself manually, but I didn't have to. If the trade went till Friday, the bot would actually close it. It either would expire worthless, or the bot would roll it to the next week. I ended up closing it myself, so I didn't have to contend with that because I knew earnings was coming up, and I know enough to know that with earnings, maybe the bot knew some stuff I didn't know, that earnings was going to be fine, but I didn't want to risk that, so I closed it myself. That's what I want you to understand with PeakBot is even though you're using the bot, you don't take away your control. You have complete control. If you don't want it to enter, you can pause it. If you don't want it to, as soon as it gets in, you want to get back out, you can, close the trades back out. You don't have to stay in any trade you don't want to be in. All right. You don't. Let's go look at some stocks. Let's go see what we can see in some stocks. Now I got to take some time to get Thinkorswim back open. So I'll do some other stuff while I'm waiting for Thinkorswim to get open. Okay, let me share with you. I talked to you a little bit about the debit spread that I did, and we're talking now about credit spreads. You can utilize the bundle, my training bundle that includes options 411, credit spreads, and debit spreads. You can put that all in one place. If you know credit spreads and debit spreads, credit spreads is a selling strategy. So you're operating as a seller when things aren't necessarily moving hard and volatile. But if you do see a strong move going bearish or bullish, you can use debit spreads like I did last week with that NVIDIA trade. You can use it. Now, debit spreads is a way for you to trade. You all saw that I was able to pay $130 for a debit spread contract with the opportunity to make $370. But, the regular price of an options contract was like 280, 280, 290. That's double the price, double plus. And if you don't want to put down that kind of collateral, or that, not even collateral, that kind of money on a buying trade, you can use debit spreads. Debit spreads are going to allow you to put up less of your money. It is going to cap your profits, but you have a capped loss and a capped profit, right? You can use debit spreads. If you're not sure how to do that, then you might check out the training. We also have credit spreads, which is what I talk about all the time, because credit spreads is our thing. That's what we do here, is credit spreads. So that's, you got that training there as well. If you want to see how do you capitalize, or how do you make money off this huge list that I just shared with you, that I told you had thousands of dollars on it. If you want to know how do we make money off this list, that comes by way of that credit spreads. We use this, not there. We use that for credit spreads. This is all credit spreads here, right? Credit spreads means you just needed to stay away from your strike and your trade will be good. Come on, Thinkorswim. It's trying to get open, but I'm running my computer so hard. My computer's like, no, what is you doing? What is you doing? I'm looking at myself on the screen with the faces, and I'm asking myself, what are you doing? What are you doing? Okay, so while Thinkorswim is trying to get going, I closed off my calendar, not my calendar. I closed off the chart because I was trying to free up some space so it would not be trying to keep too many things open and running. Okay, let me close that up. I did that so I can get a little more room. Come on, Thinkorswim, you can do it. In the chat, tell me what kind of trade you all did last week, and tell me what kind of money we made last week. You can talk about whether you made, or you can just put dollar signs, but tell me what traded last week and how that went for you. Tell me how you used the list, or use our I don't want to feel like I put out that list every Sunday and nobody uses it, even though I know people do. Share with us what trade you did last week based on the list. And you can say that they were profitable or not. If you want to tell how much money you made, you can do that too. If you want to tell us how much money you made, we won't be mad at that. Still waiting for Thinkorswim to open up. While we wait, we can get us some testimonials. What are we doing? I don't see nothing coming up into the chat. We should have some. I know some of y'all made some money off of my list. Come on, share and share alike. Share and share alike. Oh, here we go. It's starting to start. I'm waiting. Still waiting. I'm still waiting for some stuff to be put in the comments. Tell me what you chose, or you put XOM was what you wanted me to chart. Tell me what you used last week, and what and did you make profit? You don't have to talk about how much, but did you make profits? Don't be shy. Don't be shy. Is Janae on here? What y'all do with Janae? Tanya says she did Cisco, Disney, and Taiwan Semiconductors. Did they all come out profitable? I felt like one of your trades last week, two of them went well, and one maybe not so much. Tell us about it. Tell us about it. Tell us how it went. Okay, I think Thinkorswim is trying to be open. I know there's more than you, Tanya, who traded something. We just watching. Y'all just watching as we go. I need to turn on the fan. It's getting hot. It's getting hot in here. I'll keep on all my clothes. Okay. Let's see what we came up with. Delta Airlines. Let me share the screen first. Add to the stage. Coming to the stage is Delta Airlines. I'm going to change the setup. The other day when I did the changes setup, it made everything so big. It wouldn't fit on my screen properly. I need to now go back and fill in these charts. Jamie, you remember how we fixed that? How do I change and fill in the bubbles? Maybe here. And then the chart appearance. Fill up. Ay. You know what, Arlissa? You a bad mama jamma. Yes, you are. Yes, you are. Okay, but I need to go figure out how to change the font. That I might not remember. Wow. We were on the options chain, and it maybe was something here. Trade grid, option chain. Nope. Setup, application settings. Yep, look and feel. Oop, look at there. Girl, you still got it. You still got it. Turn it to larger. That should make these things get larger. Yeah, there we go. Boop, 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 boop. Gotcha, Tanya. Alrighty, so we're looking at Delta Airlines. I was going to go to the chart. So we can see Delta Airlines shows up on our list as a put credit spread. This is our daily chart. Nope, let's go to the weekly. So it's on the weekly chart. Let's go to the daily, which we can look at the weekly first. That way we'll see what is that overall trend that's going on. Okay, if we look at Delta Airlines on a weekly chart, we see the trend is upwards. Yes, upwards trend. If we were going to put a line on it, I probably would put one around in here, because if I was changing this to a line, I'm thinking there's probably a pause in there. It's kind of more momentum-ish, but you do see a pivot point back here from March 25th. So when I go to back to the candles, I'm going to look at that back on the 25th, the week of the 25th. Okay, shows here, this is our pivot point, was back here. So I'll take and move this. Maybe if it lets me move it, there we go. Move it up here to our pivot point. Okay, that's good. Remember, pivot points operate as support and resistance. Price went on through it during last week sometime. I'm going to change it to daily chart and we'll be able to see what happened. But once it hit this pivot point and got over it, now this pivot point becomes support. Okay, it was resistance back here the week of 4/1, but now it is support. Let's go to the daily chart. Looking at the daily chart. There we are. You can see right in here. This was what, the 23rd? What was the 23rd? Tuesday? Yeah, Tuesday. Right at the bottom of this, it kind of jumped from here, went on up. It dropped back down below it, and then some more, and then it rolled right on back through it again. Hanging out in this area, looking back here. This was where it became a pivot point back here, where it was resistance back on 4/1, and now it's support because we are above it. So we're at, if we look at that, 48.48 is that support area. Notice all of these are zones. A zone is not a hard spot. It's got some room, because you see the wick even here has a little bit of wick underneath it. So 48.45. We use 48.5 as the support area. When I went to Delta Airlines and I looked at on the single chart, 48.5 would be here. It's got a 74% probability out of the money. Right? If we look at it as a vertical, we're going to see that it's paying at this point for the 5 cent or for the 50 cent spread, it's paying $10 for 50 cents of collateral. That's a 20% return. Mind you, the market is closed. I won't keep repeating that, but the prices may shift a bit when the market opens based on where price is going. All right, but for you to do a 50 cent spread, if you decided, I think I'd rather have a little more room, I'd rather make it a one spread, you could definitely do that. Give you a little more space there. 47.5 is paying $17 for a one spread. That's about a 17% profit. If you let it expire worthless. If you close it a little early, you're going to take some of that off, and you're going to also take off fees. There's always fees included when you're trading, about either 50 cents or 65 cents per leg, per open, per close. So keep that in mind when you're figuring out your fees. But 48.5 could be a good place, is what I put on our list for Delta Airlines. 49.92 is their current price, and they got a 1.7 plus minus. So if you subtract that, that puts you right at 48, which is a little bit, 48.5 is a little more into that zone, but I usually go with the probability out of the money as well. 48.5 has a 74%. If you want the extra, the extra little 50 cent, if you want the 50 cent move, you can go with 47.5, 48. As always, be sure to check these numbers on Monday. Whenever you're going to enter them, check the numbers to make sure that you agree still with the strike price, and you agree with the zones, and you're okay with the probability out of the money. Don't just take the list that was created on the weekend and run it into Monday and Tuesday, because if something happens that pops it in the pre-market or something like that, you want to make sure that you take a check and you look at it upon entry of the trade. That's not just the stuff I gave you. That's everything. You want to look at, confirm your numbers, confirm that you agree with those strikes when you enter those trades. You want to always do that. I really try, anybody who's been hanging out with me for a length of time, you all know, I really try to make sure that we're learned. I try to educate us in how do I come up with these strikes. This is not me trying to gatekeep and want you to be dependent on me. No, I'm trying to teach people to fish. So I want to make sure that you're getting the knowledge that you need in order to be able to select strikes and things for yourself, whether I'm on the scene or not. I want you to be able to look at whatever stock you like. Maybe they're on my list, but maybe there's a stock you like. And I want you to be able to look at that stock and say, well, where would you pick for strikes? What would I pick for strikes? So this is there's a gap back here from 417, between 417 and 418. There was a gap, which I believe that gap has now been closed. There's a little bit of room at the top of it, but for the most part, that gap is now closed. But I wanted to show it. There, okay? If we're looking on Taiwan Semiconductors is also on the put credit spreads list. Put credit spreads list. What made me? That must be a pivot point here in a minute. 135.9 here. I put 135 as our strike price for the put credit spreads. 135 here. And the reason I selected 135 has to do with probability out of the money is at 70%. If you want a little bit, one more stop or two more stops, you can go down 133, 134. Could be up to you. Switch over to the vertical so we can see what kind of money. 134, 135 is paying $25. You collect $25 and you leverage $75, a 25% return on your collateral. Tamara says collected $1,300 in premiums on by Wednesday on SPX, 0 DTE, IWM, Carvana, EMPH, Oracle. Yes, gave it all back on Friday. Oh no! Waited too late to close Oracle and Carvana. Both went full in the money. IWM went partial in the money. Not all of it back, but a lot of it back. Oh my! I'm so sorry, Tamara. That is definitely a lesson that usually gets taught to us the hard way. How do I know? How do it know? It's because I've been there, which is why we were having a discussion. Last week. It was maybe Thursday, Wednesday or Thursday. We were talking in my training session on Thursday night. We were talking about why close trades when they're 70 or 80%. Why not just let them go and expire worthless? Because you're potentially leaving money on the table. And the explanation that I gave was that if you get to 70 or 80% profits, that your trade is, if you're holding up for the other 20%, 10 to 20, 30% of the money, you leave yourself in the situation on Thursday or Friday or whenever, getting closer to expiration, for the trade to turn against you. Because at the end of the trade or expiration, your trade is successful as long as the price expires away from your strike price. Well, if it was going good, you're doing, and the price turns back on you, or going down and it turns back and goes back up, because Friday was definitely bullish, then you can end up going through it. A good trade that would have been was good, maybe Monday, Tuesday, Wednesday, Thursday, could go south on Friday because of the proximity of the price. And I'm not saying this about for you specifically tomorrow. I'm just saying that this is a reason why closing your trades at 70 or 80% is good, because when you got the profit that you want, close the trade up and go on to something else. With us, theta decay is our friend. So go ahead and release that collateral from those trades, and then put that collateral on another trade, or call it a week. If you got what you're looking for in your profits for the week, you can call it done, son, and go on to the next thing, right? Just chill out for Friday. I really wish Fridays could be more chill. I always go back and forth. Y'all know we always talk about how Fridays are like wrestling matches, and inevitably I always find myself still in something on a Friday that I'm having to watch. I'm going to get better. I'm going to get better. I'm getting better. Not only I am getting better about that. I am. Okay. So we were looking at Taiwan Semiconductors. If you like the 134, 135 on the graphic that I provided, that's paying $25. But if you decided you want one more strike down, 133, 134, that's paying $20, which is still 20% return on the money. That's still a very good, profitable trade. Could be very profitable. 20% return on the $100. If you want to make, $100, you just do 5 contracts. You do more contracts. And when I say you just do. You do more contracts. At a one spread, right? You do 5 contracts. You're leveraging $500. And for many of us who trade SPX, that's $500 a pop, right? At least this one you've got. If you're doing 5 of them, that's still the $500, but you at least you multiplying these profits or these premiums by 5. So that way you pull in $100 off of 5 on a Taiwan Semiconductors, and you don't have to, fight the volatility of S&P 500, because it moves at the whim of other things. Apple, Nvidia, those things. Tamar, I got you, right? It is my heart that nobody has any issues. So I just really trying to make sure that we get what we need out of this process. All right. That was Taiwan Semiconductors. Let's go look at Intel. Let's see what Intel is going to tell us. Come on, Intel. You can do it. I got faith in you, Intel, even though you're going to get out the gate. You're going to be like Seabiscuit. Intel going to be like Seabiscuit. Anybody ever watch the movie Seabiscuit? Seabiscuit was a little bitty horse. It's a really good movie, good feel-good horsey story. He was just a little boy, kind of wasn't getting no play, nothing like that. And then he got him a jockey, started riding. Seabiscuit would run and play around. Then when he would get some competition, when they started outrunning him, Seabiscuit was like, "Oh no, you ain't gonna leave me." And then Seabiscuit would get moving, right? So same thing with Intel. Intel gonna be like the little Seabiscuit. Come on, buddy. Come on. Okay. So if we're looking at Intel, it's on the call credit spread list. Now up here, we've got some support at the 34.13, but this is a monstrous gap. Intel had earnings last week, in case you were wondering. Intel had earnings, and this gap goes from 31.19 to 31.90, so 32 up to 34.5, right? So if we try to put ourselves a line in the middle, like a 50% mark, 32, 33, somewhere, we need something in the middle. Let's see, 32 to 34.5, we need 1.25, so 33.2. Oh, look at that, I'm right on it. Oh, come on, you was right at the right place. Okay, that's like halfway through the gap. It's about halfway through the gap. That strike is 33, right? I gave us 33 as the call credit spread number because, and the reason I've done this, I'm not sure if this lets me show a pencil, but is there a drawing tool on here? I don't see a drawing tool. Anyway, what it says is that if this was to come up, it's going to come up and go to the 50% mark and probably go on back down. That's what I'm speculating. And then if we look at on the single chart, we're looking at, where's our 33? 33 is here. 79% probability out of the money at the 33 strike, or 32.5 is a 68, depending on how froggy you're feeling, right? 33 is what I put on our graphic, because though I might be froggy, some other people may not be as froggy, and I don't want anybody being aggressive like me per se. But 33.5 is this particular trade. It's paying $7. Paying $7. If you wanted to widen the spread, maybe make it 33, 34, it's paying $11. 11% return on your collateral for Intel. If Intel's still going to keep acting bearish, if it's going to keep acting, you can go on down to the next 32.5, and that's paying $13 for a 50-cent spread. That was at 69% probability out of the money. That's right at 70, right? So 32.5, 33. And if you wanted to widen that spread, 32.5, 33.5, that's paying $20 for a one spread. Just like the last trade we looked at, which was Taiwan Semiconductors, a one spread paying $20 is a 20% return on your collateral. That's Intel. We don't want to capitalize necessarily on the fact that it can't get out the gate, but come on. So if it's going to not do right, then we're going to, we'll just use you until we use you up, right? Intel will do it. These people right here are vicious. We take no prisoners. We take no prisoners. Okay, that's Intel. Let's look at Exxon. If you're riding along with me, go ahead and make sure you like and subscribe to the channel, right? Go ahead and click the notification bell. Put me a thumbs up in the chat if you decide I really do like what you provide every week. Send me a super chat. Maybe you send me a sticker or something with a few dollars on it. Feel free to do that. We won't despise any support around here, okay? If y'all like what we're providing for free that we provide every morning, because y'all know we on here every morning. Between me and Jamie, we here Monday through Friday for pre-market and into the market. Jamie doing that good charting in the morning. Woo, he be getting his good charting in the morning. On the days that I was teaching, I didn't go as deep because I couldn't hang out on the call as long, but school is over. Even though, Jamie, I got to send you a message because Tuesday I have a conflict. Okay. Even though I'm done teaching for this semester, I still have a conflict on Tuesday. So, what are you doing? No, I don't want you to do that. I only want one gap. I have to mention it when I remember, and Jamie's going to be like, why didn't you say that on the air? I forgot. So I'm telling it now so I won't forget later. Okay. Looking for Exxon is on the call credit spread list as well because it did have a drop off for earnings. It had earnings and it didn't do too well on the earnings. It dropped and then okay. So I'm taking these words off because those are not accurate anymore. 121.43 is what I have, but I have 121. I have 121 as our strike price for the call credit spread. And I'm going to look to see what about halfway through this gap. See if I can eyeball it. That's about halfway through the gap, 120, right? So about 121, if you want to get to even where it fell off from here, this is 121.43. It's a little bit higher. 121 would be could be a good strike price for a call credit spread. Let's look on the chart for the week and see what 121 offers us. 121, 80% probability out of the money. 120 actually could probably work, but we can go at 121 to be safe. Better be safe. And that's because actually this is 117.96, which is 118, and you got the plus minus number of 3. So 118 plus 3 puts us at 121. That's what also helped inform my decision for 121 as the strike. For we go to a vertical, 121, 122, that's paying $14. Call credit spread on Exxon, $14, 14% return, minus fees, of course. Don't forget to take away your fees. Don't forget to subtract your fees. Okay. Who's got questions so far? Anybody got questions? Anybody got questions? Más preguntas? I'll show that. Can that run? It's supposed to be. We'll leave it there. Okay, so the next one we're going to look at is iron condors. Baba. Baba is a Chinese Amazon. I've got Baba down for an iron condor because it showed up on PeakBot as neutral, not bearish or bullish, but neutral. So let's look to see what would make it show up as neutral, right? Anybody see anything that would give them the neutral? Would it give them neutral vibes? Y'all see this? Basically, it's been between this zone, the top of this and the bottom of this has been between this zone now for way last long time. Actually, I could probably go even further back because it bopped out. It was out a little bit here once it came into this zone. This is back in November, right? From November to now, it's been in this same zone. Even the Bollinger Bands are like, this is boring. This is boring. You ain't even trying to pop out. What you waiting on? What you waiting on? We got what you waiting on. What's going on? Okay. This is how Baba end up with the I'm definitely in a channel. What time do we start pre-market? We do pre-market on I want to say 9:25. We did Tuesday and Thursday at 9 o'clock because that's when I needed to do it till I could do. But I may move everything to 9:25 now that I got a few weeks off for summer break. I may move it to 9:25 so that way they'll be the same day, same time every day. Okay. Okay, so this is what's going on with Baba. If we're looking at where are we? What we doing though? Lots of gaps. And it's just jumping around. Jump around. Jump around. Let's go see what we would trade. I picked 74 as the bottom and 78 as the top. Let me see if I go back to the chart and see 74 at the bottom. And I think I got that based on what we're doing back up in here. Ooh, this is like, let me switch to the weekly chart. It's hard to see what to do in there because it's just channeling. Put us on the weekly chart. We'll have fewer candles to look at. Okay, that's what's going on with it. Up, down. This is a line here. I could turn it to a line chart and then we can see the peaks and valleys even better. But most closely, we've got this one here. Price went up here. You can't really see it as well. Let me stretch this out so we can see the changes in the prices. Green candle went up. It jumped up here and then came back down for the day. We also have this green and red are up in this candles back from January. We could also use those as guidelines. This is 74, 72. Most closely, though, we've got this one here from April, first part of April, right? And if we're looking at the top, 78 is where the top of the channel is. 78 and some change. So between these two, it has fallen out more recently and came back into the top part of the channel. Let's go look on the option chain and see on the put side. I've got 74, 70% probability out of the money. You could go down one if you wanted to 73. The good thing about iron condors is you're going to take money in on both sides. It's a put credit spread and a call credit spread together. And because you're going to take money in on both sides, you can be a little more conservative on each side. Okay, so if 73 is more comfortable for you on the put side, then go with 73. It's an 80% probability out of the money. It's about, they've got a 2.7. So if you take away 2.7 or 3 of these, you'll be at 72, right? Yeah, you'll be at 72. That's why I get 72 or 73. And then if you went up to the top side, 78 here has a probability out of the money of 76%. You can go with 78. If you wanted to go one more to 79, you could do that too. Right? Let's switch over to verticals and see what kind of money we're talking about. If we were to just, if the market was open right now and we were jumping in right now, we'd go with 72.73, would pay $13, and we'd go with, I guess this is one way you can build you a, I hope it'll fill in like this. It may or may not. 78, 79. Will it do? Nope. It wouldn't let you fill in all at once. I don't like to show iron condors this way because I think it can be confusing when you show it like this, but let's go ahead. If you can pick, if you got some, you're going to have to adjust. If you're going to put in a whole iron condor, which is not the way I suggest you enter either, because iron condors really should be entered separately based on what your strikes are, because as price is closer to one or the other, you're going to get better premiums. You're going to get better premiums if you enter them at separate times. Okay, so but I'm changing these to the numbers that we looked at because I want to be able to show you how much the money would be for the entire iron condor, and the puts would be 72.73. Okay, so all four legs you would take in $28, and you're only leveraging $100 because one spread you're only using collateral on one side. Right? So if you did it right now, market close, of course, you would take in $28 for a one spread. That is a 28% return on your collateral, minus fees, of course, would be there. If you were feeling a little more froggy and you want to go up to 74, you want to do 73, 74, you pull in $40 for that iron condor. Okay? The good thing about iron condor, like I said, you get iron condors is you pull money in on both sides. You pull the money in from put credit spreads and from call credit spreads, but you only leverage the collateral one time, right? If we were to confirm and send over here, you're going to see that it says our max profit is $40. Our max loss though is $60. Right? We're not going to use any more collateral than that one spread. The buying power effect is only the $60. It's not $160. You're not paying for both sides. You're only paying for one because the broker knows that the price can't be at 78 and be at 74 at the same time. It's only going to be at one place. So they only need to use one set of collateral. Okay? That's how that goes. I'm going to send this and see if we can do it for, see if it'll sit for us or it's rejecting. Because the market's closed, I need to put in, change this limit to, change the day to good till cancel. So that way it'll just sit there. On the call side, what did we have? 78. I'm putting this in our sim so that way we can see what it does for the week. 72, 73. I'm changing this to 74 and 73. Okay, $40 collected. Let's see if it lets it sit there. Why are you not doing? You open a prohibited position. What am I in? Illegal 200 shares. What are you? What if that means, I'm not going to worry with it right now, but I don't know what this illegal 200 shares is. I'm not sure what that means. Okay, this is in the sim. So listen, this sim money, the sim money is, we're millionaires when you sim. When you're a simmer, you're a millionaire. I need to restore. I think when you're sim, somebody else who's on here, I'm trying to clear my deck. Trying to clear the deck. Reset all positions. Reset. Tamar says, past few weeks I've applied and stuck to your strategy. Whoop. I've accumulated $900 minimum every week. Whoop. Got greedy the past week and did not close on my contracts, and greed bit me. Tomorrow, this makes my heart warm. This makes my heart very warm. It's to know that that worked out for you, that you're using the strategies that I share each week, and that those strategies are working out for you financially, right? Selling is a whole ball game, right? Selling's a whole ball game. And some people don't fully appreciate what the selling game does because all they see is big profits with the buying. And I think the two can work in conjunction. I really feel like there's a way to capitalize off selling and periodically still use buying. I'm not opposed to the buying strategies. You all see that I do some buying. If the situation presents itself, it's another tool in the tool bag, right? If the situation presents itself, then let's go for it. But that's good to hear. So good to hear. Let me try one more time to get this trade in now that I have fixed the call part. I fixed my situation in my sim, 78.79, and I'm going with 73.74. Okay, now let's go good till canceled. Okay, now that trade should sit and wait. It should be in the working category. And as it is, it should be working until tomorrow morning where it will pick up or do whatsoever it's going to do. Okay, let's go look at Oracle. Let's go look at Oracle. What was Erica's answer? What time did we start pre-market? I gave her that answer. Hey, Janae, I was calling for you earlier. Yeah, I told her we start at 9:30, 9:25 every day, and we're going to probably do the Tuesdays at 9:25 also, Jamie. Okay, this is Oracle. Oracle on the weekly chart. Look, we see anything familiar? This is the weekly chart. What is Oracle doing? The same thing Baba was doing. Riding the channel. I'm riding the channel. We can go here. We can go to the bottom of the channel. We're just riding the channel. Up, down, up, down, up, down, up, down, up, down. Okay. The strike prices I have is 115 on the put side, which I've got this from up in here, from this big red candle that fell here and then turned green. The next week, this was last week. This is a weekly chart, which means this is last week's data. Okay. And the call side was 120. 120, which is right in here. And I'm going to show you on the daily chart where I got that from. Daily chart. Thank you, Jamie, for checking to make sure all of the questions were answered. Okay. Here we are. This is the daily chart. Every candle equals 1 day. Better is 1 day in your house. Better is 1 day in your... I think it's quartz goes first. Better is 1 day in your house. Yeah, quartz goes first. Thousands elsewhere. Okay. Got a gap between Thursday and Friday. It didn't have earnings. Wonder what made Oracle bump up like that. What made Oracle pop up like that on Friday? Anybody know that Oracle get some news on Friday that made them pop up like this? This is a humongous gap from back here that's now filled, right? But it's a pretty good sized gap. Price came right on down and grabbed it and then went on back up and created another one and another one and another one. Okay. So 115 right here where the price kind of sat still for a couple of days. We got some little dojis back in here between 424 and 423. And then as far as resistance goes, we're right here at this chair. If I change this to a line, we'll see right here, there was a pause that happened. Let me go and maybe, I like the Bollinger Band. I don't want to take them off. The Bollinger, sometimes when we put on the line, all the other lines get you confused. But let's go back to candles. Okay, that's how I got 120. So between 120 and 115, I see as our zone. Let's go back to the single. No, not there. Want to go to single so we can see what our probability of the money. Remember, you got time to, you got a little more space because if you're going to trade both sides, you can be a little more conservative on each side. 115 is 70% out of 73% out of the money, and 114 is 80% probability out of the money. So if you want to go down one more, you definitely can. If you want to go up to 120, which is what I picked, 120 over this side, that's going to be a trade on the call credit spread side. Okay, I'm going to show you again. If we were looking at it right now today at 114, 115, somewhere, I'm just going to pick one of these and then I'll have to adjust. This is why I don't like iron condors all at one time, because you have to adjust these. You have to then adjust these numbers. And it's an opportunity for there to be an error. 114, 115 on the put credit spread side, and 120, 121 on the call credit spread side. Okay. If you were to go with those numbers, you would take in $37 right now for another one spread. 37% probability out of the money for a one spread. Okay. If you enter them separately, which is what I suggest you do, is enter them separately to make sure that you can get the most premiums depending on the time of day. As price goes up, you enter the call credit spread. As price comes down, you enter the put credit spread. And that may not happen all on the same day, right? You may enter the put credit spread on one day. Like, as you can see, we got to kind of joji. We don't know which way it's going as far as this goes. The wick on the top is kind of much bigger, so it may be more downwards pressure. So maybe you enter the call credit spread first, or maybe you enter the put credit spread down here below something. If you are more comfortable with 113, there's a whole zone right here at 113, the big 113.59 or 57. You could use this, or you can go to the 113 if you want it as price was coming down. That's going to give you a good premium on the put credit spread side. And then as price goes up, you enter on the call credit spread side. It's going to maximize your premiums that way. All right. So that was Oracle, 115 to 120, still on our list. We've got several things we pulled. I just went through 6 stocks. We got to do one more because, you know, who has one? You know, we didn't look at Amazon at all. Amazon's not even on my list. How did that happen? I'd like to trade Amazon. And we probably should go look at SPY as well. Do we have any XLs we want to look at for this week? What time is it? Oh, it's about 6:30. Been on here about an hour and a half. The time just flies when you're having fun. Y'all think this is fun? If you think this is fun, say me in the chat. Time flies when we're having fun. This is Amazon on the daily. Amazon has 169.60 as a support down here, but the middle of this gap is also going to play, which it kind of did already. I'm just eyeballing the middle of the gap. Looks like, see how this wick came down into it? How the wick came down. Thank you, Erica. How the wick came down into it. But now this 175.76 is support. If you wanted to go down and pick up this 174.57, you could also use that as some support. I probably would go with, let's flip back to the chart real quick. Are we sharing? Nope, I'm not sharing my screen. I was like, wait a minute though. Wait a minute. There we go. Can't see the chart. I got y'all. So we're on Amazon now. We have this gap between Thursday and Friday. Maybe this is what helped Oracle make the jump. Halfway through the gap is about 175.76, and we've got support though at 174.57 based on this chart from the 19th, right? So you could even get underneath this gap if you wanted, going on up higher, 173.77. Let's switch over to the option chain and see what we see. 70% is at 170. 170 is 70%. If you want to go one more, 165, 167. It's a plus minus 13. So taking 13 away gives us with 166. So 165 in this area. That takes us a little bit further down into the 80. 165, 167.5. The 2.5 spread is paying $55. 20% return on your money. Right? 165, 167.5 on the put credit spread side. Jamie says the tech sector is reporting this week big time. So XLK, XLV, XLY Would those be good to look at though, or should we like stay away from those, potentially seeing that they are going to report this week? Should we maybe, be mindful or wait till the end of the week before we trade those? Should we do that? Okay, I'm looking at SPY. Anybody besides me have a love-hate thing going with SPY? Me. Erica says stay away from the ones that are earnings this week, because if other things got an impact, if other things have an impact on an entire sector, it could cause issues. Let me go down here and grab some of these lines. I haven't charted SPY in a very long time. Again, I told you that the love-hate thing is real. I'll do SPS, but you know what? What I started doing with SPY this week, though, I'm working with PeakBot, and I'm testing out the Iron Condor 1 DTE, because y'all know that was my baby. That 1 DTE on SPY and Triple Q was my baby. So what we do is basically about 12 noon, look to enter an Iron Condor for the next day, and then set the buyback order. Now, my first run, which was my first day, SPY, Triple Q, and all them mugs ran up for Friday. So all of my call credit spreads got breached on Friday. But I had taken in almost $50 for each of them. So my max loss was 150, which by the time they were all fully breached, I did end up with max loss of 150, but it wasn't a max loss of anything bigger because I had gotten close enough to the strikes to make it work. I'll take the 150 loss just as we continue. I might have to run it back to, move over to the sim so we can see what the sim is looking like, though, because that was live money that we did. So we'll see. I'll keep y'all posted. On that. So this is SPY I'm looking at right now. Got a gap just below SPY, just below current price. Say eyeball in the middle of that gap, 504.91. If we look at the overall trend of SPY, of course, for the week, for the year, SPY is up because it's up with SPX. But if we look at the overall trend of what's going, it's got an upwards trend going. Right? Can I bring this in any tighter so we can see? Overall trend, and it's gone up and pulled back. I believe if we put a Fibonacci on this, we'd probably see that it pulled right back to maybe the 30 or the 50% mark. Maybe not even that. If we're going from this to here, we're probably back at the 20. Let me see if I can find a tool that'll work for us. Registration channel. I need the Fibonacci that's up and down. Will this one do it? I feel like this one's going to give me. Yep. It's not the one I wanted. Not the Fibonacci I was after. I want the up and down one. Okay. Of course, I don't see it. Oh, Fibonacci time ratios? What's that? Nope. Not what I wanted. Why am I not seeing the Fibonacci? Am I missing it? When I pick the tool, that says quadrant lines. That doesn't sound like the fib. But let's see. Yep, that's the 4 quadrants, which works per se. It came right back down to the 25% mark. I put it in quarters, and it went up from there, came back to the 25%, which is right here, 25% mark, and then turned back. And then you have this trend line that's automatically provided for you. Jamie says, you asked what sectors. You didn't say to trade. If anything, I'd rather keep an eye on the sector regardless of. I agree with that, whether you're trading it or not. Erica says, wait, so what are we doing? You're doing 1 DTE on SPY and triple Q, entering at around noon and setting up your buyback order the next day. Yes, that's what I'm doing. And doing it with looking at the delta. Let me type it out. SPY. And again, this is just a test. It's just a test. SPY triple Q. Actually, I also did XSP, which is kind of a SPX lookalike though. And enter at around noon. Enter around, not really at noon. Enter around noon. And using, what delta did we use? Oh, around a little close to, actually it's still close to the 30 delta, but just below. Closing 30 delta for 1 DTE and closing at 0.05. And I wouldn't put the close order in. I wouldn't put the close order in until the next day, because that same day when I entered those on Thursday, and if I had put the close order in on that trade, the put credit spread side would have triggered, and I basically would have triggered three day trades because I had 3 different stocks. It would have triggered 3 day trades because I set it for 1 DTE. But if you put the close order in right away and they trigger, then it's going to close it. So you have to wait till after the market closes in order to put in your close order for the next day. So I did that the next day. I kind of waited thinking that SPY and triple Q might hit something and fall on back down after everybody started taking their profits. But NVIDIA ran so hard on Friday, there was no way for those stock prices to come down. They kind of paused and hung around for a bit, but they didn't turn around. So, okay, this was SPY trading. If we were looking at SPY, the support area is like 495 on SPY. So if we were looking, no, I don't want SPY in, I just want SPY. If we were looking to trade it as a single, don't know if we have any 0 DTEers on SPY. We stopped doing 0 DTE on SPY as a seller because the broker will close your trades and charge you a day trade. So if you're going to trade SPY as a seller, then you should definitely do the 1 DTE, unless you're working in a cash account and you need to be buying if you're doing that. But to Monday, 75% probability of the money, 506. If you were looking at something still going upwards, 506 would be potentially a good strike. Potentially, of course. If you change this to vertical, you could maybe do 505, 506, somewhere in there. Again, I wouldn't go with the 1 DTE. I wouldn't go with 0 DTE. I'd go with 1 DTE because you want to let it go overnight with SPY as a seller, because the 0 DTE, the broker closes it, charge you the day trade, and you're just ticked off when that happens. You could go at 504 or 505 with 1 DTE looking right now. 504, 505 would be pay about $19. I'll pay about $19 in premiums for a 1 DTE. Probably be good to wait and see, like I suggested, to noonish. It's not like a hard noon, it's noonish, to see, get in your premium, see what you're going to get for your iron condor. About 30 delta, between 27, 29 delta on both sides. 70% chance of either of those being good. Closing it early increases your chances increases your delta, increases your percentage of success. So that's that. All right. That is that. What else did we need to cover for the day? Y'all see, I just did a bunch of charting, right? I did a bunch of charting here on this call. I do have for you a free webinar. Start with the chart, right? It's a free webinar that you can go. You go to startwiththechart.com. Let me see, where is, nope. Here we go. Show this, startwiththechart.com. Let me see, what were you asking me, Erica? I did see that a comment popped up. You could get in earlier because of volatility, but then what you're doing is exposing yourself to the entire day worth of volatility. So if you wait a little bit, maybe 11-ish, so that way you get past the volatility, because you kind of also, you want to have a little bit of opportunity to see what is the price going to do for the day. So that way you could see what could be good strikes. Or you just pick go with the 30 delta, but you don't want the volatility of the morning. You're going to get higher premiums that way. But if at 9:30, 10 o'clock, it starts moving in one direction and you've entered an iron condor, you've kind of set yourself up for, you're missing the 10 o'clock turnaround. The thing that would happen in the first 2 or 3 hours, you're going to miss getting good strikes to make sure that you kind of get yourself set for the iron condor to work for the next day. Now, if you're feeling a little more risky, you could definitely go in a little earlier. But if the price runs in one direction for the majority of the day, your trade is basically could potentially get breached the very same day you enter it. And that's not what you're after. It's not what we're after. Okay, start with the chart is there. Startwiththechart.com. Okay, I think I covered everything I wanted to cover back in the slides. We did start with the chart. We talked about our graphic. We see the bundle, the spreads bundle. We talked about that earlier. We looked at my peak bot trades. We looked at that NVIDIA trade from Friday, and we looked at earnings. Yeah, I think we've covered the gamut, and we've been 1 hour and 37 minutes. All right. In the morning, 9:25, Jamie comes on in the morning. I'm generally there when I will be in the morning. I'm there to lend support, right, for Jamie, but he does his thing, and I appreciate his willingness to do such. I think that's about everything. Don't forget, like and subscribe. Like I said, you got the trainings. You got educator-to-trader.com. Yeah, it's an iron condor. That's how you get money on both sides. It's how you end up with taking in so much in premium, so that way your max loss is brought way down. Okay, now if you're going to do one side only, then you can do it. Then you can do it in the midst of the volatility. But if you're doing an iron condor for one DTE, you want to give it a little more time. Okay. All righty. Well, we're going to call this a wrap, and we move on to what we have this evening, right? Check out capitalflow.app. Some of the stuff you're not going to be able to see. What I'm thinking I'm going to do this week, though, is I'm either going to go live, or I'm going to record a video of Capital Flow while it's in motion. It's not going to show a lot of the data, some of the data right now. It'll still show some stuff, but it won't show all the data right now because the market is closed. It definitely shows flow as it's actively coming in. Okay, so we'll do that. We'll talk about it some more. Consider PeakBot. All right, use PeakBot as option sellers. We're option sellers and automated trading as a seller. You definitely want to check in on that too. I know there are people who, if you're working during the day and you really want to still be able to capitalize on this, you go out this way. These are my thoughts. And I said this the other day. I see using PeakBot and using Capital Flow as like a marriage. It could be like almost like a perfect marriage, right? So PeakBot is coming in for the sellers. You can do your iron condors. You can do your trend spread, which is kind of primarily what we do. Maybe not the iron condors as much. Maybe you do the trending. You pick your stock and you trade the trend as a seller. You got that going over there. Automated. The broker, PeakBot, the bot, make sure that you don't get assigned. If something happens where you're getting breached, the bot will close the trade and will open you up a different trade, and maybe in a different direction. The bot, determines what did it switch from bullish to bearish, and if so, let's trade to the other side. Right? The bot will make those situations, make those calls for you, and you don't have to worry about getting assigned inside of the bot. Then you have Capital Flow. Capital Flow is going to show you what's popping right now. what's hot right now, what's getting a whole lot of flow. So even if you just look on, maybe you like SOXL and you say, I really like SOXL. Let's see what kind of flow comes in for them. And you see something that comes in for SOXL, a bunch of orders there, and you're like, well, SOXL is popping. Let me go ahead and capitalize on what that is showing me, whether as a seller or a buyer. You can say, well, I'm going to utilize this asset, this app to gain trade insight for ones that are getting a whole lot of purchases that are being made, right? It could be any, you can see what is the stock that's getting. One thing I saw last week was a trade called, company was TLT. Anybody heard of TLT? Was it TLT? Yeah, it was TLT. And I had never heard of them. Is it TLT? Yeah, I had never heard of them. They showed up on Flow last week. And I was like, a whole bunch of money went to a place that nobody knows about. TLT showed up and we rode that a little bit. Right? I think it was puts. This is a week. Nope, it was a daily thing. And that one, and then PRB. PRB was another one that was a little known stock that's actually in the fuel space. And another one that came up out of nowhere. Like, I hadn't even heard of those people, but the flow came through. Like, let's go see. This was the day. This was the TLT day. A bunch of puts during this day, and you see how it dropped like it did. You marry the two, peak bot and capital flow, and your knowledge, because you know how to chart, you know how to use and pick strikes. So just because, because flow suggests what strikes other people use, that don't mean that's strikes you're going to use. And you marry that with your charting, because you all know some technical analysis. You're not going in blind and you're not going blink. I mean, with peak bot, you're picking the stock you want and the bot is picking the strikes for you. You don't have to worry about whether I pick the right strikes or not, because the bot is doing it. In capital flow, you see the stock and then you can do your charting and decide what strike you like. Or strikes, if you're doing debit spreads or whatever it is you're going to do. That's how you make that work for you. All right. We're marrying. I think what we're going to do in our coaching call, we have coaching this coming Saturday for, if you're a part of my community, a part of our, I keep saying I'm going to finish. If you're a part of my community and my membership, on the first Saturday of every month, we have our coaching. There we go. We do our group coaching on the first Saturday. And I think we're going to look at some, we'll dive deeper into peak bot and into capital flow. That's what we're going to do there. See what we see. Okay. So how do you use the flow? See what's coming in and then go chart it. Yes, you definitely see what's coming in and then go chart it. I'm going to switch to another screen. Turn me on. I didn't mean to turn you on. Didn't mean to turn you. Yeah, Erica, Schwab is, they're getting the Schwab all tested out. It should be ready. They started testing it this past Monday. So once Schwab is ready, I'm switching to Schwab on the 10th, I think it is. I think Dylan said their Schwab's going to be up and running maybe by the 6th or something like that. Okay, this is the Capital Flow app. This is what the app looks like. Yep, Miss Deborah, that's going to be a good move. I'm going to log in, see if it lets me in. I may have to go into not Chrome, because I usually use Capital Flow on Mozilla. There it is. These are going to be small letters, but let's see if we can get something. We can get some bigger, so we can see a little clearer. Okay, so this is what you would see with Flow. I'm going to take me off the screen so I don't block up anything that you need to see. Overall Flow it's showing is bullish. This was as of April 26th at 5:59. Let you know that this data doesn't show up on this. It's not going to keep running on the weekend. Call premium, 12. What's this billion in calls and 6 billion? Yeah, in puts. put premiums that have been sent in. So you got a few things you can do here. You can look at top contracts by premium. And if you drop this down, you can see here, what is the top list? What is happening? So you see Microsoft, and it gives you the date and how much money was spent. Can y'all all see that? I hope y'all can see. Let me turn off how to read stock charts so that doesn't block up anything either. Okay. You can see it gives you the stock. It gives you whatever call they did and what the dates are. 426 was Friday. NVIDIA calls 426, right? NVIDIA calls 426. So here, if we look here, we've got 36 million, 35 million, 35 million. This is 34 million. That's $100 million in just these three. This was 61 million. So this is 101.2 or 120 million for those. And then there were some other ones that popped up. So my point is, I don't want to get lost in the weeds, but you can see this top contracts by premium. What are the top ones where the money is coming in? You see a few that came in with puts, but they're also coming up with puts for some later dates. Now, if you want to swing, then you want to swing out further, then that could, be something good there too. Scrolling down, it shows you here exactly what came in when it immediately came in. And now this shows SPX, and those come in. A lot of those always come in after the market closes. So SPX, the orders for the 29th, which will be tomorrow, showed a lot of calls entered for tomorrow. Y'all see all this? SPX, all these orders came in after the market closed on Friday, right? Then you've got, tells you how much money was spent on each of these orders. Right now, then we do have some puts that showed up on SPX as well. So, can't get excited about just the calls. A bunch of puts showed up too. Could be spreads, could be, what's and never, but you're looking to see what's what. These are all that came in. Let me go down further to like what happened during the day, because all the aftermarket stuff is going to show you SPY and SPX, XSP. Here we go. HYG showed up 5-3. Is the date. 1.15 million was put on HYG stocks puts for the 5-3 expiration date. Okay, so this lets you know where was the money coming from, and where did it go, right? Triple Q is there. Triple Q. Scroll down. No, I'm scrolling fast. SPY. This is later in the day. XSP had a bunch. Okay, so you can look at it by just what's coming in under the scroll. You can do that. That's one, you got the top contract. I just showed you two things. Top contracts, which is here. You got whatever scroll in real time. Or you can say, I'd rather look by symbol. Maybe I want to see what is Taiwan Semiconductors doing. I can put that in. You can put as many as you want in here, by the way. If you only want certain ones you got for the watch list today, you can like, well, I'm liking see what Ford is talking about. Let's see what Ford has on the watch list. Come on. I wanted to show here, and there we go. Ford is up here. So you can put whatever number of them you want, and then this ticker underneath you is going to show just the stocks you selected, and what time were the orders come in for those, and what were the orders that came in for those. You see, Taiwan Semiconductors, a whole lot of calls came in for 5-3. A lot of calls in for 5-3. A few puts. Ford got some 5-3s calls as well. Then one more thing you can do is, okay, so I've showed you three things. Top contracts, just letting the flow put in by your symbols. You can say, okay, I want to look at week on 0D. Once the week is open and the market's running, this will have a 0 DTE next to it. So if you just want 0 DTE stuff, if you want to look at weeklies, if you want to look at swing trades, you can show that. It shows you the ones that are expiring between 5-4 and 10-19, or you can look at leaps. It says leaps are going to be greater than 10-19 for their expiration date, right? You could say, I want to see only the unusual type of orders. I want to see unusuals. Well, it shows here that on Friday at 4:15, SPX got $2 million. Another $2 million came right behind it. That came into the puts area. 1.8 came into the puts area. So this, if you want to see, I want to see the unusual activity. Okay, so this is all that's going on here in the Flow app, and this happens. You see the date, the time that it comes in. This is all happening in real time. In real time. All right. Any questions about Flow? Coolly. Okay. There's a 0 DTE that shows up next to here when the market is open. And that's where you can see your 0 DTE stocks, things that are expiring that day, anything that's expiring that day. Because, like things like gold expires multiple times during the week. So does the VIX, of course, SPY, and all those expire daily as well. So that's that. All righty. In the membership, again, we're going to talk about we're going to talk about flow a little bit more perfectly, I'm guessing. And we'll look at what PeakBot has to offer and how we can capitalize off of these different things in our community. The Option Sellers course bundle includes all the courses that I teach. Everything that comes out of Educator to Trader is available there. Okay. All righty. I think I'm really finished now. We almost 2 hours in. All right, you all. I want you all to have a really good end of your Sunday. Okay, prep your minds and your bodies for what is to come this week. Make sure that you have adjusted or revisited your trading plan to make sure that you're clear on what kind of trades you're doing. What are you trading? When are you entering? When are you exiting? What stocks are you doing? What's your criteria? And then you want to revisit the trades that you took previously this week. Make sure that ones that went well, why'd they go well? The ones that didn't go well, what happened? And then you're setting yourself up for success in subsequent weeks. 10 too many S things. Okay. All righty. So I want you all to do 2 things. Definitely stay green and let's get this money. All right. I'm going to see you all later. See you tomorrow morning. See you tomorrow morning. See you tomorrow morning. I see one comment that popped up. So would it be prudent to sign up for PeakBot now in preparation for when they integrate with Schwab? Wait till they integrate, Erica, and then go ahead and sign up because you're going to get a 2-week free trial and you might as well use your free trial once it's integrated. Okay. Make sure you use it when it's free for your 2 weeks free. You want to use it when you can actually use it. All right. It's my pleasure, Janae. My pleasure. You're welcome, Erica. All righty. Have a good night, Miss Deborah. Everybody, I'll see y'all later. Bye. Bye, bye. Bye, everyone.